Okay, so today we're going to be diving into something that I know a lot of people are thinking about. It's inflation.
Yeah?
And, we've got a really great set of articles that the learner sent in, looking at kind of how to navigate this time of rising prices
Exactly.
and, maybe even potentially find some opportunities.
Yeah, absolutely.
So we're going to be kind of like cutting through the noise, really getting to like the key strategies and how you can apply this stuff, to your money, your finances, your investments.
Right. And I think you hit the nail on the head with that idea of opportunity because that's what we really want to dig into.
Yeah.
It's easy to get caught up in the doom and gloom of rising prices, but your sources here actually point to some really interesting ways to not just survive inflation,
Right.
but potentially thrive in this environment.
Yeah. I mean, I think it's totally natural to be a little bit, on edge when you see prices going up.
Mm.
You go to the grocery store and things are more expensive. You're filling up your gas tank, it's more expensive. And your sources definitely highlight this. I mean, they talk about how it can feel like you're always kind of on this treadmill, like
Mm-hmm.
trying to catch up.
Yeah, like your income is never quite keeping pace with how quickly the cost of living is increasing.
Exactly. And that makes planning for the future, it introduces a lot of uncertainty.
Absolutely. But the good news is, as we'll see from these articles that you sent in, inflation doesn't have to be a financial disaster. There are definitely proactive steps you can take
Right.
and mindsets you can adopt that can actually help you not just protect what you have, but potentially grow it.
And that's what we're going to be looking at, right? We're going to be focusing on these key principles that kept popping up in your materials, the importance of financial literacy,
Mm.
understanding how money works,
Mm.
smart saving, not falling into the trap of high interest debt. And then looking at some investment strategies, specifically kind of designed for these times of rising prices. And we'll also get into the perspectives of some really big names in investing to see what they have to say about all this.
Right.
So let's start with the basics. What exactly is inflation, and why should you, as the learner, be paying attention to this?
Okay, so in the simplest terms, inflation is just the rate at which the prices for goods and services in an economy are increasing over time,
Right.
and as your sources correctly point out, when that happens, each unit of currency buys less than it did before. So essentially, your purchasing power is shrinking.
Right. So your money is worth less.
Exactly. And that directly impacts your personal finances,
Right.
makes your savings worth less over time. And it makes it way harder to plan for big expenses down the road because who knows what things will actually cost.
Yeah, and one of the articles you sent in, I think it's the one on navigating inflation's impact, used this phrase hidden tax to
Yeah.
describe it.
Right.
And I thought that was really powerful because it really captures that feeling of, you know, you might be getting a raise at work,
Yeah,
but somehow you're not really feeling any richer.
exactly. And the numbers in your source really drive that point home. I mean, over the past decade, the median household income went up by about 20%.
Okay.
But inflation over that same period was closer to 23%.
Wow.
So even though people were earning more on paper, their actual buying power decreased.
So it's like taking one step forward and then almost two steps back.
Yeah, that's a good way to put it. And the article also touched on something that I think is really important to understand, especially in today's economic environment, and that is the role of government actions in potentially contributing to inflation.
Right.
Things like pumping money into the economy through stimulus measures like we saw recently.
Yeah.
The basic idea there is that if the amount of money in circulation is growing faster than the production of goods and services, then each unit of currency becomes less valuable, which leads to higher prices.
So more money chasing the same amount of stuff,
Mhm.
basically.
Yeah, exactly. It's supply and demand on a massive scale.
So understanding these forces at play, that's kind of like step one, right?
Absolutely.
And one of the articles you shared actually provided a pretty clear step-by-step guide to building a solid financial foundation. And step one was all about financial literacy.
Mm-hmm.
So why is having this really strong understanding of finance so crucial, particularly when we're dealing with inflation?
Well, it's often said that knowledge is power. And in the world of personal finance, that couldn't be more true.
Right.
Financial literacy is the bedrock. It's about understanding how money works, and that includes understanding how inflation erodes purchasing power,
Hmm.
the impact of debt interest rates and taxes on your overall financial well-being.
Yeah.
And critically, it involves getting a grasp on the basics of investing, which becomes even more essential when the cash you're holding is losing value due to inflation.
Right, because if you're just holding on to cash, it's actually shrinking.
Exactly. It's like having a leaky bucket. You need to find ways to put your money to work for you.
Okay, so how do you start building this financial literacy. I mean, where do you even begin?
Well, thankfully, the article actually pointed to some really great resources for building this knowledge.
Okay.
It recommended books like Rich Dad, Poor Dad for a different perspective on wealth building,
Hmm.
and The Richest Man in Babylon for some timeless principles of saving and managing your money.
Those are classics.
Yeah, and then for more practical how-to information, it mentioned online resources like Investopedia and NerdWallet,
Okay, they're good ones. Yeah.
and even YouTube channels like Graham Stephan and The Financial Diet were mentioned as really accessible ways to learn.
Oh, I love those. Yeah, those are great.
Yeah, so the key takeaway here is that continuous learning, staying curious and applying this knowledge consistently, that's how you effectively navigate inflation and really any financial challenge.
So it's about empowering yourself with information so you can make smarter choices.
Exactly.
Okay, so step 2 in building that financial foundation was about saving consistently and avoiding high-interest debt. Now, this seems like pretty solid advice, regardless of what the economy is doing, but how does it specifically relate to inflation?
You're absolutely right. It is fundamental advice, but it takes on even greater importance during times of rising prices.
Good.
Building a healthy emergency fund, which your source suggests aiming for 3 to 6 months of living expenses, acts as a crucial buffer.
Mm-hmm.
So if unexpected costs pop up, you're less likely to have to resort to high-interest debt to cover them.
Yeah, that makes sense.
And on the flip side, avoiding that high-interest debt, particularly things like credit card balances, is absolutely crucial because the interest you're paying on that debt can very quickly outpace any gains you might see from safer investments.
Right, so you're kind of digging yourself into a deeper hole.
Exactly. And the article really stresses the importance of creating a budget as that essential first step in taking control of both your savings and your debt.
It all comes back to the budget.
Yeah, the foundation for everything.
Okay, so once you've got that solid base in place, the next step that the article highlighted was building passive income through investments.
Yes.
And this is where things get really interesting when we're talking about inflation.
Was sure.
What kind of investments did the article point to?
It covered a pretty good range, actually.
Okay.
Starting with stocks, of course, with examples like Apple and Google, and then platforms like Vanguard and Robinhood for getting into the stock market.
Hmm.
Real estate was another big one with rental properties.
Right.
REITs, which are companies that own and operate income-producing real estate.
Okay.
So it's a way to get into real estate without having to actually manage properties yourself.
Yeah, that sounds interesting.
And then some resources were mentioned, like real estate investing for dummies and bigger pockets for learning more.
Great.
Peer-to-peer lending and crowdfunding platforms like Lending Club and Fundrise were also mentioned.
Okay.
And then cryptocurrency, but with a big cautionary note about its high-risk, high-reward nature.
Yeah, we got to be careful with that one.
Absolutely. And some platforms like Coinbase and Crypto.com were mentioned as entry points.
So it's a pretty diverse set of options.
Right.
Now, how do these different investments potentially help you deal with or even profit from rising prices?
Okay, so if we think about the big picture of inflation, each of these asset classes has unique characteristics that can be really advantageous.
Okay.
Stocks, especially those in companies that have strong pricing power.
Meaning they can raise their prices without losing customers.
Exactly. They can often perform well during inflation because their revenues and profits may increase alongside those rising prices.
Okay.
Real estate, as we'll talk about more later, often sees property values and rental income rise with inflation as that tangible nature of the asset kind of holds its value even as the currency weakens.
Interesting.
Peer-to-peer lending can offer higher yields than traditional savings accounts, which might help to at least partially offset inflation, though it's not without its own risks. And then cryptocurrency, while being super volatile, is seen by some as a hedge against the devaluation of traditional currencies because many of them have a limited supply.
Yeah. But again, big emphasis on the volatility there.
For sure, it's still a very new and speculative area.
Okay, so the next step that was outlined in building that financial foundation was about shifting your mindset towards becoming a business owner or investing in businesses.
Mm-hmm.
Why was this particular shift emphasized?
Well, the fundamental idea here, which came up in several of your sources, is the transition from being primarily a consumer or employee
Right.
to becoming an owner of assets that generate income.
Okay.
Because as an employee, you're often tied to a salary that might not keep up with inflation.
Right.
But as a business owner or even a part owner, through investing in stocks, you have the potential to benefit from rising prices and overall economic activity.
I see.
The article gave examples like starting a side hustle or investing in companies like Chipotle or Tesla. You're essentially moving from just spending money to having a piece of the pie of the entities that are creating wealth.
So it's about having your money work for you instead of just working for your money.
Exactly. It's about changing your role in the economic game.
Okay. And then the article mentioned taking advantage of tax benefits that are available to investors,
Yes.
which can be a complicated area. So what are the key takeaways here, especially as it relates to inflation?
It's all about recognizing the structural advantages that the tax system often gives to investors compared to those who are just earning a salary.
Interesting.
Your source pointed out that capital gains tax rates, which are the taxes you pay on profits from selling investments, are usually lower than regular income tax rates,
Okay.
which incentivizes investment as opposed to just earning a wage.
I see.
And then you have tax-advantaged retirement accounts like 401ks and IRAs, which allow your investments to grow tax-deferred, meaning you don't pay taxes on the gains until you withdraw the money in retirement, which can be a huge benefit over the long term, especially with inflation because your returns have more time to compound.
So it's about playing the long game and using the tax system to your advantage.
Exactly.
Okay. And then the final step in building that solid financial base was continuous education.
Right.
Sounds like this isn't a one and done kind of thing.
Not at all. Financial literacy is a journey, not a destination, especially when things are constantly changing like they are with inflation.
Right.
Your source highlighted the importance of lifelong learning and recommended resources like The Motley Fool, the Dave Ramsey Show podcast, and the Side Hustle School podcast.
Oh, yeah, I've heard of those.
Yeah, great resources for staying informed and adapting your strategies as needed.
So it's about staying curious and always being willing to learn something new.
Absolutely. The financial world is constantly evolving.
Yeah. Okay, so we've covered building that financial foundation.
Yeah.
Now let's get into specific strategies for actually profiting from inflation, as outlined in another one of the articles you shared.
Okay.
The first key strategy was holding real assets.
Yes.
Why is this considered a good move during inflation?
This was a recurring theme across several of your sources, and it makes a lot of sense when you think about it.
Yeah.
Real assets, particularly things like real estate and tangible assets like gold and oil, they tend to hold their value even as the purchasing power of currency decreases.
Because they have intrinsic value.
Exactly. They represent something concrete, something tangible, as opposed to just paper money.
Okay, let's dive into real estate first. The article suggests that property values and rental income often rise with inflation. So how can someone leverage that trend?
The article recommended a couple of ways you could directly purchase property
Okay.
or invest in REITs through platforms like Fundrise.
Yeah, those were mentioned earlier.
Right. REITs are companies that own and operate income-producing real estate, so it's a way to get into real estate without the hands-on management.
Right.
And during inflationary times, when rents tend to increase, REITs can be a good way to potentially benefit from that.
So you're kind of riding that wave of rising rents.
Exactly. And what's really interesting is that the article also talked about using leverage.
You mean like taking out a mortgage?
Yeah, exactly. Because if you have a fixed rate mortgage during inflation, the real value of your debt is decreasing over time as property values rise.
So your monthly payments stay the same, but they're worth less in real terms.
Exactly. And resources like Zillow and Fundrise can be great for exploring different real estate options.
Okay, and what about those other tangible assets you mentioned, like gold and oil? How do they fit into this?
Similar idea as real estate, as inflation erodes purchasing power, the prices of finite resources like gold and oil tend to rise.
Right, because there's only so much of it.
Exactly. And that limited supply combined with increased demand can lead to higher prices.
And gold has often been seen as a safe haven during uncertain times.
Historically, yeah, when there are concerns about currency devaluation or economic instability, people often turn to gold as a way to preserve their wealth.
Okay, so the next strategy for potentially profiting from inflation was the strategic use of debt.
Yes.
Now, that might sound counterintuitive to some. So how can borrowing money actually be a good move when prices are rising?
The key here is the relationship between interest rates and the rate of inflation.
Okay.
If you can borrow money at a relatively low interest rate, and it's a fixed rate,
Okay.
and inflation is higher than that interest rate, you're essentially repaying your debt with money that has less purchasing power than when you borrowed it.
Oh, I see. So it's like the debt is shrinking in real terms.
Precisely. And the article highlighted that even big wealthy companies with tons of cash on hand sometimes choose to borrow money when interest rates are low because they can then use that borrowed money to invest in assets that will hopefully grow faster than inflation.
So it's about leveraging debt strategically to potentially amplify your returns.
Exactly.
Now, we talked about gold a little bit earlier as a tangible asset, but the article also highlighted it as a safe haven. Are there other aspects to consider here?
Yeah, gold has a long history of being seen as a safe haven asset, especially during periods of economic uncertainty and high inflation.
Hmm.
It's often seen as a store of value that can help preserve wealth when traditional currencies are losing their purchasing power.
So people flock to it when things feel shaky.
Right, and the article mentioned several ways to invest in gold. You could buy physical gold,
Okay.
invest in gold mining stocks, or use ETFs like SPDR, Gold Shares, GLD to gain exposure to the price of gold.
So there are different ways to play it.
Yeah, and resources like Gold Money can give you more information on all that.
But we should note that gold is often viewed more as a preserver of value than a driver of huge growth.
Right. It's more about protecting what you have than necessarily multiplying it rapidly.
Okay, the next strategy was cryptocurrency, and as we mentioned before, that comes with a big warning about the risks involved.
Yes.
So what's the rationale for including it in a discussion about profiting from inflation?
The argument presented in your source is that some cryptocurrencies, particularly Bitcoin, are seen as a form of digital gold because they have a limited or at least capped supply.
Okay.
And the thinking is that this limited supply could make them less susceptible to inflation compared to traditional currencies.
So kind of like gold, but in digital form.
Yeah, that's the idea. And the article mentioned the potential for high returns, especially for early investors, but it's crucial to remember that cryptocurrency is extremely volatile.
Right. It's a risky game.
For sure. And platforms like Coinbase and Binance were mentioned as places where you can buy and sell cryptocurrencies.
So it's something to approach with caution and do your research.
Absolutely. Education is key with any investment, but especially with something as new and complex as cryptocurrency.
Okay, and then finally, the article discussed investing in stocks, specifically those of stable growth-oriented companies.
Yes.
What's the logic behind that strategy in an inflationary environment?
The idea is that companies that sell essential goods or have really strong brand loyalty and pricing power.
Meaning they can raise their prices without losing too many customers.
Exactly. Those companies tend to be better equipped to navigate inflation because they can pass on those rising costs to consumers without significantly impacting their sales.
So their revenues and profits can keep pace with or even outpace inflation.
Right. They're not as squeezed by those rising costs.
Okay.
The article also mentioned dividend-paying stocks as a way to generate income during inflation. And it highlighted low-cost diversified index funds and ETFs, which you can get through platforms like Vanguard as a sound approach.
So you're not putting all your eggs in one basket.
Exactly. Diversification is key for managing risk.
Okay, so we've got all these potential strategies now. Let's shift gears and look at what some really well-known investors have to say about inflation.
Okay, sounds good.
One of the consistent messages that came through from people like Warren Buffett and Ray Dalio was this idea that holding on to a lot of cash during inflation is actually really bad for your wealth.
Yeah, cash is trash. During inflation is a phrase often attributed to Ray Dalio, and Warren Buffett has expressed similar sentiments.
Because its purchasing power is constantly eroding.
Exactly. It's like
Yeah.
watching your money slowly melt away.
So the key is to put that money to work in investments that can potentially outpace inflation.
Right. The focus should be on achieving real returns, meaning the return on your investments after you account for the impact of inflation.
And what about bonds, which are often considered a safer investment option?
Well, while they're generally seen as less risky than stocks, the consensus among those big-name investors, particularly Warren Buffett, seems to be that bonds aren't that great during periods of high inflation
Okay.
because those fixed returns that bonds offer might not keep up with the rising cost of living.
So you could end up losing money in real terms.
Exactly. And Buffett has been particularly skeptical about bonds in this kind of environment.
So he's not a fan.
Not really, no.
Now, real estate came up earlier as a potentially winning investment during inflation. Did those investor insights line up with that?
They did. Yeah, real estate is often highlighted as an asset class that tends to perform well during times of rising prices.
And one of the reasons for that is that inflation actually reduces the burden of a fixed-rate mortgage.
Right, because as property values go up, the real value of your mortgage debt goes down.
And your monthly payments stay the same, but they're worth less in real terms.
Exactly. Inflation is working in your favor in that scenario.
Okay, what about gold? We talked about it as a safe haven. What do those big investors think about gold?
Well, Warren Buffett acknowledges gold's historical role as a store of value during uncertain times.
Mm.
But he doesn't see it as a primary driver of wealth creation the way he sees productive assets like businesses.
Right, because gold doesn't generate any income or profits.
Exactly. His view is that while it can hold its value during turbulence, it's not going to make you rich in the same way that investing in a successful business might.
Okay, but Ray Dalio seems to have a slightly different view.
He's a bit more open to the idea of holding gold as part of a diversified portfolio, particularly in times of geopolitical and economic risk.
So there are different perspectives even among these investing giants.
Right, and it ultimately comes down to your own individual risk tolerance and investment philosophy.
And that brings us to the concept of productive assets like stocks and businesses. This seems to be a core focus for Warren Buffett.
It is his philosophy centers around investing in businesses that create value over time.
Right.
And he especially likes companies that have strong brands and pricing power.
Because they can raise prices without losing customers.
Exactly. They can weather the storm of inflation better than companies that don't have that kind of leverage.
So it's about finding those businesses that are built to last.
Exactly. Those that have a durable competitive advantage.
And one of the most interesting points from the investor wisdom section was this idea of investing in yourself.
Mm-hmm.
Can you elaborate on why that's such a powerful concept, especially when we're thinking about inflation?
Well, Warren Buffett actually considers investing in your skills and knowledge the best hedge against inflation.
Really?
Yeah, the idea is that if you have valuable and in-demand skills, you can command higher pay for your work.
So you're less impacted by rising prices.
Precisely. You're essentially increasing your earning power to stay ahead of the game.
So it's about constantly improving yourself to stay competitive in the job market.
Exactly, and to protect your earning potential against the erosion of inflation.
Okay, so that covers the individual strategies. But
Yeah.
one of the articles you shared also talked about the bigger picture of the economic system and how certain players might actually benefit during inflationary times.
Right. It really highlighted this idea that some entities have a built-in advantage when individuals are struggling with debt, overspending financial dependence, and primarily relying on wages for income.
Okay, so who benefits in this scenario?
Well, banks, for example, they profit from interest payments on loans.
Hmm.
Corporations often benefit from increased consumer spending, even if that spending is fueled by debt. Employers may benefit from a workforce that feels financially insecure and therefore less likely to push for higher wages.
Okay.
And governments can potentially collect higher tax revenues from employed individuals compared to the lower capital gains taxes often paid by investors.
So there's a whole system at play here.
Exactly. And the article suggested that individuals can start to shift this dynamic by changing their role within the system.
Right, by moving from being just a consumer to being an investor or even a business owner.
Exactly. Because when you own assets that generate income, you start to benefit from the system's growth rather than just being subject to its pressures.
And you can take advantage of those tax benefits that are often available to investors.
Right.
So it's about becoming a participant rather than just a passenger.
That's a great way to put it.
Okay, so we've covered a lot of ground here. What are the key takeaways that you think are most important for the learner to remember from this whole deep dive?
Okay, so from all the sources we've looked at, I'd say there are a few things that really stand out. First, developing a deep understanding of what inflation is and the fundamentals of personal finance, that's absolutely essential.
Mm-hmm.
Second, actively moving your money into assets that have a track record of maintaining or increasing their value during inflation, like real estate and well-chosen stocks. That seems to be a recurring theme.
Okay.
And then strategically using debt when interest rates are favorable and even considering assets like gold and with caution cryptocurrency. Those are strategies that are often employed by people who are successfully navigating inflation.
So it's about taking control of your finances and being proactive.
Exactly. It's about moving from a passive mindset to an active one.
Okay, now for you, the learner, how can you actually apply all of this information to your own financial journey?
That's the million-dollar question, right?
Yeah.
This deep dive is really meant to highlight the importance of continuous financial education.
Mm.
It's not about getting overwhelmed by all the details, but rather about understanding the core principles and identifying specific actions that you can take based on your own risk tolerance and financial goals.
So what are some examples of those actions?
Well, it could be creating a budget if you don't already have one, exploring low-cost index funds as a way to get into the stock market,
Okay.
or learning more about real estate investing, whatever feels most aligned with your interests and your goals.
So the key is to take that first step and start moving in the right direction.
Exactly. It's about going from being reactive to proactive, from being affected by inflation to taking control.
Now, if you had to pick one big moment or key realization from all of this, what would it be?
I think the most powerful takeaway is that while inflation does present challenges, it also creates opportunities.
Okay.
For those who are financially literate and proactive, and the shift from being primarily a consumer to embracing the roles of an investor or even a business owner, that's a huge concept that can really help you build lasting wealth.
So it's about changing your mindset as much as it is about changing your financial habits. And for the learner who wants to dive even deeper into this, what would you recommend?
Your sources are a great starting point.
Okay.
They provide a ton of additional resources for learning more,
Okay.
from specific investment platforms to books and podcasts that offer really valuable insights.
Great. So there's plenty to explore.
Yes, definitely.
Okay, so let's leave the learner with one final thought to ponder.
Okay.
The economic system can seem really complex and maybe even a little bit intimidating at times.
You can.
But the key is that once you understand its basic mechanisms, you can start to use it to your advantage.
Right.
So the question for you, the learner, is this: what small but significant step can you take today to shift from being someone who's affected by inflation to being someone who's strategically responding to it and maybe even benefiting from it?
That's a great question to leave everyone with.
Thanks for joining us on the Deep Dive.
It's been a pleasure.
See you next time.
See you later.
Come along, it's time to fly. A financial journey, we're aiming high. Cashless compass, showing the way to a debt-free life, starting today. No more stress, no more strain. Family, friends, we're breaking the chain. Chasing freedom, we're on the rise. Financial peace, let's reach the skies. Cashless compass, lead me to the top. Debt-free dreams will never stop. Passive income flowing, you're feeling so free. It's happiness now for you and me. Investments that matter, so worthy of time. Building wealth, yeah, we're climbing high. Education's the key, unlock the door to a stress-free life and so much more. No more limits, no more fear. We're breaking through, the future's clear. Passive tips, income streams. This is the life, we're living the dream. Cashless compass, lead me to the top. Debt-free dreams will never stop. Passive income flowing, you're feeling so free. It's happiness now for you and me. Step by step, we're moving ahead. No more chains, no more debts. Building wealth, stress-free, no doubt. Cashless compass, we're breaking it. Cashless compass, lead me to the top. Debt-free dreams will never stop. Passive income flowing, you're feeling so free. It's happiness now for you and me. No mess, no stress, just pure success. Join the journey, we're here to impress. Cashless compass, you're finally free. A life of wealth and serenity. No more stress, no more mess. Family, friends, come and progress. Striving for freedom, we're on the move. Come along, let's start this ride. A financial journey, we're walking with pride. Cashless compass, you're finally free. A life of wealth and serenity, so bright. Woo, woo. No more stress, no more mess. Family, friends, come and progress. Striving for freedom, we're on the move. Come along, let's start this ride. A financial journey, we're walking with pride. Cashless compass, guiding you right. to a debt-free life shining so bright.